Hi everyone. From this video series, I am going to cover as much as possible past paper questions from the area NPV in your A-level accounting paper. So we are going to start off with the year 2022. So in year 2022, NPV calculation, NPV question was there in the paper 2, question 4, part B. So when you are looking at the question, you can see this is a 10 mark question. Okay. So let's read the requirement first. What are the requirement of this question? First one, the schedule of cash inflows and outflows for each year. By looking at the discounting table, I can see the cash flows will be there for 5 years, but let's read the scenario. And the second requirement, they are asking us to calculate the NPV. The third one is they are asking us to give the recommendation. Amal PLC produces pharmaceutical items to the local market. In order to improve the efficiency of the production process, the company is considering a project to replace the old machine with a new machine. So what this Amal PLC is now planning, they are planning to replace their old machine with a new machine. Because when you use a machine again and again over a period, the efficiency will reduce. So what they are planning to do, they are planning to increase the efficiency by replacing the old asset with a new asset, with a new machine. And what they have given, the estimated price of the machine is 2,800, if not 2.8 million, 2,800 without zeros, I say. Okay. So here 2.8 million, its expected useful life and estimated residual value. Expected residual value is 450,000 and useful life is 5 years. Further, 200,000 will be incurred to transport. 200,000 will be incurred to transport and install the new machine. So what you have to understand here, this 2.8 million, it is the initial investment cost. Okay. So when you are reading the scenario, it's better if you can write down the years of the cash flow. So investment you will do today, right? Today means now, immediately, which is the year 0. Just write it and keep it. Okay. If you can find it out, it's better. And next what they are telling, it is having a residual value. Residual value after the usage of the asset, you will sell the asset. So this particular asset is there for 5 years. We are going to use it for 5 years. That means after the usage only we will sell it, right? We will use the asset for 5 years. End of 5th year only we will sell. So by selling that asset, we will get 450,000. So this particular cash flow will happen in year number 5. Because after 5 years only I will sell the asset. For 5 years I have to use the asset. So when you will get that money, if you sell the asset end of 5th year, you will get that money, 450,000. Further, 200,000 will be incurred to transport and install the new machine. Understand. Now you are going to purchase the asset now, today, year 0. Then you have to transport and install it also today, no? So this cash flow, this particular cash outflow is going to happen when? Today. So not only the purchase cost. For the purchase cost, there is an additional cost you have to consider. This 200,000 cost you will incur because of the project, right? You have to transport it because of the project. So you have to consider that 200,000 as well. Because this is a cash flow which will arise because of the project. You have to consider it. If the new machine is purchased, the old machine can be sold at the same time. So you can sell the old machine for 800,000. So you will get that money. If I am bringing the new machine, I can sell the old machine. By selling the old machine, how much I will get? 800,000. So this is also a cash flow which will happen in year 0. Other cash flow estimation of the project are as follows. The additional working capital requirement at the beginning. This is very important. Working capital requirement at the beginning is 300,000. Just because you purchase the machine, you can't start the operations. No? You have to incur cost for the working capital. How much is the cost? 300,000. So this is an amount that you have to spend or you have to give today itself. Now let's assume I am the person who is doing the investment. For the working capital purpose, from my pocket, I have to give 300,000 today. I have to give for the working capital purpose. So this is going to be a cash outflow. Year zero, there is going to be a cash outflow for me. Year zero. And here they have given a very important point. Can be recovered at the end of the project. What they are telling, yes, for the working capital purpose, I am giving 300,000. Now, my cash is going out. That's why it is outflow. But after the project is over, I can recover the money that I gave for the working capital purpose. So how much I gave for the working capital purpose? 300,000. I can recover that 300,000. Then what you have to understand, my project will be there for 5 years. After 5 years, whatever the money that I gave for the working capital purpose, I can get it. That means there is going to be a cash inflow. There is going to be a cash inflow in year 5. The operating expenses will be decreased annually by 200,000. Operating expenses will decrease. That is one of the purpose of buying this machine, right? To increase the efficiency. If you increase the efficiency, what will happen? The cost will get reduced. If the cost reduces, there is a saving. So this 200,000 is a saving. Saving, we will be considering it as cash inflows. We will be considering it as cash inflows. And next one, the sales revenue will be increased. Sales revenue, it will increase by how much? 400,000. So this cash flow will be there from year 1 to year 5. This cash flow also will be there from year 1 to year 5. And they have given the discounting factor. Discounting factors they have given from year 1 to year 5 at the rate of 10%. First requirement, we read the requirement first. The requirement is you have to prepare the schedule for cash inflows and outflows for each year. So let's do the question here. Question number 4, part B. Here I write cash inflows, and I can leave like maybe 8-9 lines. I leave like 9 lines. 1 2 3 4 5 6 7 8 9 cash outflows. So this particular question is there for 5 years. Then I'll write the year numbers. Year 0, year 1, year 2, year 3, year 4 and year 5. So now let's go to the question. Here first one, they have given the estimated cost of purchasing the asset 2.8 million. So it is going to be a cash outflow for me, because when I am purchasing the asset, I have to pay money. So my cash is going out. So I'll do the calculation in thousands. Okay, here in this question, new machine purchase. New machine purchase, how much is that? 2,800. So I will purchase it today. Today means year 0. And the next one, so we are done with that. Scrap value is there, 450,000. After 5 years, what I will do? I will sell the asset. So if I sell the asset, I will get money. So here, before writing the scrap value, it's better if you can write these cash inflows that you are getting. So here operating expenses will get decreased by 200,000 every year. So I'll write that one. Saving in operating expense. Saving in operating expense every year, there will be a saving of how much? Here they have given 200,000. 200,000, 200,000, 200,000, 200,000, 200,000. Then additional revenue is there. So we are done with this. Put a tick once you are done with an adjustment. Additional revenue 400,000. revenue 400,000, 400,000, 400,000, 400,000, 400,000. Good. So we are done with that one as well. Put a tick once you are done with an adjustment. So now let's write the scrap value. If you sell the asset, you will get money. You will get money. So scrap when you will get the money after 5 years only. I will sell the asset. End of 50 year, I will sell the asset. So that is a 450,000 cash inflow I am getting end of the 5th year. 450,000, which is the scrap. So we are done with that one as well. Next one, what they are telling, further 200,000 will be incurred to transport and install the new machine. So what you have to understand, as I told you previously, this is a cost that you have to incur now itself if you are purchasing the asset. So that is also cash outflow. I have to incur that cost. Cash is going to go out. So what is that cost? We will take it as transport and installation cost. Transport and installation cost 200. So when you are writing, you have to write it neat and clear manner. So we are done with that one as well. And if the new machine is purchased, we can sell the old machine. So if I am purchasing the new machine today, I will sell the old machine today itself. So by selling the old machine, I will get some money. I will get some inflow. So inflow by selling the old machine. Sale of old machine. Sale of old machine. I will get that money 800. I will get it immediately today itself. I will get. If I purchase the asset today, I will sell it today itself. Okay. So we are done with that one as well. So we are done with this adjustment is done. No, this adjustment is done. This adjustment is done. We have to do the first adjustment. Additional working capital required at the beginning. So as I told you, I am the person who is going to do the investment. I have to give money for the working capital purpose beginning of the project itself. So the cash is going to go out. Working capital. The amount is given. How much is that? 300,000. 300. But what they are telling, whatever the working capital that I am giving, I can recover it once the project is over. So working capital recovery, end of the project, I will get that money. How much is that? 300 cash inflow. I think we are done with all the adjustments, if I am not mistaken. Yes, we are done with all the adjustments. Now let's take the total values here. Year 1, year 2, year 3, year 4 and year 5. So here you can get the total cash inflows. Here 800, here 600, here 600, here 600, here 600, here 600, 900, 1350. 1350. So these are your total inflows. So let me take the total outflows also. Total cash outflows. So here you have a total cash outflow of 3,300. Other years nothing. So now I can take the net cash flow. Let me take the net cash flow. So here negative 3,300, positive 800. So here it is negative 2,500. Here 600. Here 600. Here 600. 600. and 1350. So we are done with the part A of the question. So part A or part 1, what they are asking, the schedule of cash inflows and outflows of each year of the project. So this is the part 1 of the question. Now let's do the part 2 of the question. Part 2, what they are asking us to do. So part 2 of the question, what they are asking is to calculate the net present value, the NPV. How to calculate the NPV, part 2. Your net cash flows should be multiplied from the discounting factor. So let me write the net cash flows with the years: year 0, year 1, year 2, year 3, year 4 and year 5. So let me write the net cash flows of each year. Here 2500 negative, 600, 600, 600, 600, 1350. So here in this question they have given the discounting factors at 10%. Discounting factors at 10%. Yes. So discounting factor at 10%. So always year 0's discounting factor is how much? 1. So what is the meaning of the discounting factor? What is the today's value of 1 rupee? So if I am giving 1 rupee now, what is the today's value of that 1 rupee? 1 rupee, no? If I am giving 1 rupee after a year, today's value of that 1 rupee is 0.91. So that's the meaning of the discounting factor. What's the today's value of 1 rupee? One person is telling I have 0.91 now. One person is telling I will have 1 rupee in another 1 year. Both are same. We can't say the person who is having 1 rupee in another 1 year is more rich. We can't say like that. That's the meaning of that, because you know with the time, with the inflation, time value of the money will decrease. Value of the money will decrease. So to get a certain product or service, you will have to pay a higher price. One person is telling I have 0.91 now. Let's assume to purchase this pen, if you spend 0.91 now, after a year to purchase the same pen, you have to spend 1 rupee. Why you are paying a higher price? Because the value of the money has come down. So what's the meaning of the discounting factor? Today's value of 1 rupee. So year 0, why always discounting factor is 1? If I give you 1 rupee now, what's the value of that 1 rupee? 1 rupee. That's it. So here discounting factor 1, 0.91, 0.83, 0.75, 0.68, 0.62. So this is how as I can remember, but let's confirm the numbers. 918375, 918375, 6862. Yes, my numbers are correct. So now let's take the present values. Present value. So here it is 2500, 600 into 0.91, 600 into 0.91, 546, 546, 600 into 0.83, 498, 600 into 0.75, 450, 600 into 0.68, 408, 1350 into 0.62, 837. So what is the NPV then? What's the NPV? 546 plus 498 plus 450 plus 408 plus 837 minus 2500. I am getting a value of 239. 239. So here inside the brackets I'll write rupees 239,000. Rupees 239,000. 239,000. Why it is rupees 239,000? Because we did the calculation in thousands. We did the calculation in thousands in this particular question. So that is the answer for the part 2. Part 3, what they are asking for us to write the recommendation. So you know, if the NPV is positive, here I'll give you a small note. Okay, if the NPV is positive, you have to accept it. You have to accept it. If the NPV is negative, you have to reject it. So in this question, your NPV is positive, positive 239. Then how to write the recommendation? I'll write the recommendation over here. Since the NPV is positive, it is recommended to proceed with the investment. So this is how you can do a NPV calculation. I hope you got something from this particular video. If you like the video, and if you want to watch something similar in the future also, please make sure to subscribe the channel. Somewhere over here you can see all the questions, or you can click the playlist and you can check all the questions that I have done in A-level accounting past papers.